We're calling the meeting to order, the Finance, Audit, and Legislative Affairs Committee meeting. First order of business is approval of the minutes from the June 2nd, 2026 meeting. Do I have a motion, please? Betty, second. Paul? Okay. Any changes, corrections? If not, please vote. No item. Thank you. That's unanimous. Okay, moving on. We are at informational items. Julie, you're going to give all of your reports first, right? Okay, go for it.
Good afternoon. All right. So in your packet, we have April, which is now period 4. So we should be about 33.3% through the fiscal year. All funds combined, their sources, we are at 24.9% of budget, and expenditures were at 24.2%. And general fund, we are 27.9% for revenues, and for expenditures at 26.8%. And looking at the activity from April to May, there was not much notable changes. So similar items I reported on last month carried forward through this month. At our meeting last month, we did have a question regarding PPRT. And so I do have a short slide deck to show you historical information and give a little bit of projections of where we might be going the rest of the year. So once that is on the screen, all right. So income tax and PPRT tax have historically an exception for 21 through 24 have performed similarly, although PPRT has always been more volatile, but over time they have done similar performance. So when we look at revenues, especially for the budget, what we can get from IML and the estimate from historical data is a pretty good indicator of where we might go. So looking at income tax through May, we are at 2.99% higher than we were in 2025. Looking at historical data in 25 and 24, the first 5 months have been a pretty decent indicator of where the county might end up at year end. So we estimate that 2026 will be about 2 to 3% higher than 2025. So in this chart, I have updated the estimated actual for 26 at about 6.5 million. So it's about 2.5% higher than 2025 and about 3% higher than the adopted budget. I've been checking, and IML will release their July news review magazine, and once that's uploaded, I have a high confidence that they have a state shared, so when we come back in July, we'll be able to have a little bit better data that'll be reported in the monthly financial report. For PPRT, through May, we have 50% of our receipts year to date. We will have 4 more which will come in July, August, October, and December. Our two largest distributions that are yet to be received are in July and October. So, during the budget, we'll have July and August. So we'll have 6 distributions, but we'll still have one more large distribution yet. So we still rely on historical data and what what IML will estimate. So year to date, we are about 5.98% higher than the same period in 2025. The IML has projected that in their February 26 magazine that we would be statewide PPRT distributions would be about 1.8 million, which billion. So what that translates to the county would be about $6 million. So that's where we are as of today. Let's see. And then going last, the major question really was, where do we see this going in the future? Looking at the historical data, even though PPRT always was a lot more volatile, we anticipate that moving forward, the issues that happened in 21 to 24, which were the erroneous calculation that the state had due to the revenues that came in and the federal and state legislation impacts, and the impacts that it had in 2025 and 26 that brought it down. Going forward, we should go back to a normal trend. Again, we do not anticipate FY21 through 24, so that could happen, but we are hopeful that the state has had enough pressure from not only our entity, but statewide to make sure that they do not make that same mistake going forward. One last thing that does impact the PPRT budget is that the state is diverting funds away to help balance their budget. So through their state fiscal year 27, they've diverted $4.26 billion away from PPRT. So since 2009, that's approximately 1.3 million with the calculation that I can do. And then in their state fiscal year 27, that's about 126,000 of an impact to us. So that was the presentation slide deck that I have for you today. If you have any questions, I would be happy to answer them. We are excited about the FY27 budget, and we're in there right now.
Any questions for Julie? Okay, thank you. Okay, thanks. Heather?
Good afternoon. I have the first item is a long-term care services fund report, and the current balance through April 30th is $3.6 million. We have earned $46,000 in interest this year and $240,000 in interest to date, and we're still on track to hit that $11 million balance pay off the principal in 2032 with about $1 million to spare. Any questions? I'm happy to answer.
Questions? Okay.
Okay. The next one is the accounts payable review, and in your packet you have a list of all the transactions that we paid out for the month of May. And I believe it was about $4.4 million total. If you have questions on any individual line items or in general, I will try to answer those to the best of my ability.
Any questions on that report? Okay, are we ready?
I think so.
Okay.
Yeah.
So no resolutions, but our discussion is going to start out with the FY 2027 budget. So I've asked Heather and Scott a couple of things that we're going to talk about. So I'll start the discussion off. One of the things that I have been concerned about over the last year or so is the FICA and IMRF fund. So do we want to start there?
That's fine with me. Sure.
Okay.
Okay. Yesterday, Chairwoman Williams asked if I could do a bit of a forecast on IMRF, FICA, and the risk fund. And for IMRF, so if you'll recall, in the fiscal 26 budget, we shifted some pennies out of the tax levy from IMRF and FICA, and it was a total of 5.92 pennies that were shifted out of those two funds, 1.87 out of IMRF and 4.05 out of FICA, and we shifted those to the risk fund, 4.17 pennies to the risk fund and 1.75 to the general fund. The general fund is maxed out at the 25 pennies that we're able to levy there. And the risk fund went up to, I believe it was 17.469 pennies. So we did that as over time, IMRF and FICA had really accumulated their fund balances. And we decided we'll go ahead and shift those out in 26 to kind of build up the risk fund, spend down the IMRF and FICA funds down to about $400,000 fund balance each. And so we do that knowing that we would have to shift those pennies back to IMRF and FICA. So now we know the ending balances in those accounts for December of 2025, and we have a pretty good projection since we're about halfway through fiscal 26 as to where we're going to be. Due to vacancies and not being at 100% employment all year, that's how the funds had accumulated a bit. And we see that happening a bit again this year. IMRF finished 25 pretty close. It's about $50,000 off of the projected fund balance. And FICA was about $300,000 over. So we're still in a really good place. And going into fiscal 27, we'll have more solid numbers as we go along in the budget cycle. But with rough personnel numbers, we're looking at the need to shift at least 5.25 pennies back. So of the 5.92, shifting about 5.25 back to meet our target numbers for employment. I would not recommend moving them out of the general fund. I think if we're going to do anything, it would be out of risk or somewhere else that you, but most of the other levies are kind of set. So I would think risk would be the one with the most flexibility at this point.
So what are we currently, how many pennies are we in the risk fund?
For the fiscal 26 budget, we had 17.469, which is the highest we've had potentially ever. Last year's was 13.299. The year prior was 11.549. 11.647 the year prior, and then 8.576.
So do we feel like the risk fund is pretty healthy at this point?
I feel like it's the healthiest it has been. We're at, let's see, right now, sorry, they're in different locations here. We finished 2025 with a balance of 4.58 million. If we have all of the property tax deposited as planned this year, and all of the transfers and interfund department charges out, we'll end with 5.4 million. But I don't foresee spending everything that we have budgeted in that fund this year, because if you'll recall, there was $2.2 million was budgeted in the risk fund to be transferred to the capital projects fund as part of the full $3.5 million for the architectural and engineering services for the jail. That won't all be spent this year. And so if we do as a pay as we go, those funds, I mean, they're very highly unlikely we would spend that full 3.5 million this year, and it won't be on a PO. So it would be up to the board if you wanted to still do that transfer or not into the capital projects fund this year. But if we're doing the pay as you go, that full amount would not come out of the risk fund.
Do we see any large expenditures coming out of that fund? Scott, maybe you can better answer that.
Well, there's definitely one piece of large litigation that is hanging out there. We did pay out the Heidelberg settlement, so that isn't on the books anymore. But there's another litigation out there, and obviously we can go into closed session and talk about that litigation if the committee would like to. But the exposure is significant and would more than drain the reserves in this fund.
Thanks. Is there anything else that you want to?
Just to note that this projection also includes the 50 vacant positions that currently exist across the county. So
Okay.
we took that into consideration.
Are there any questions from the board on the FICA IMRF or the risk fund? Okay, thank you. Appreciate that.
Sure.
Scott, can you talk about, is there anything legislatively that we need to be concerned about moving forward into 2027 with the Illinois budget being signed?
I think we heard Julie talk about the impact that we'll see on PPRT revenue. We're already outperforming the state's decision to use some of that in the local government distributive fund to help balance their budget. Means that's lost revenue even though we're performing above expectations. So that is both a positive in that we're outperforming, but a negative in that we will not see as much as maybe we would have originally anticipated had that not been done. At this point in time, that's the biggest thing that we've been able to identify. The governor still wants to talk about some of his affordable housing strategies. That was a collection of bills in the General Assembly that did not move in both chambers at the end of session, that had everything from a variety of incentive packages for the homeowners to taking away local zoning authority, mostly for municipal governments versus county governments. But all of those things have the impact have the ability to impact the tax base, and where property taxes are a sizable portion of our total revenues, any impact to the tax base has an impact on that revenue stream. Lastly, sales taxes and use taxes, are significantly delayed in terms of how we see when we actually see the revenues come in. So we really only have a couple months of the calendar year data at this point. Those will be a state shared revenue that we watch very closely throughout the summer as we craft the recommended budget.
Any questions for Scott? Okay, so I just want to let everybody know that on the agenda for next month will be the jail finance discussion. So we'll have Shelby here, and of course Scott will, and so we'll have a whole discussion about what's been happening and what's going to happen in the 2027 budget. So now I want to open up the floor to any questions or concerns or any comments that board members would like to make regarding the 2027 budget. Danny?
Yeah, I just have one, and shared it with Scott already, but happy to say it in front of the committee and just any staff members that are currently listening and electeds. But historically, I've heard from departments and elected offices not receiving feedback as to why something isn't funded at the full level. So my ask of Scott this year was to ensure that if something is not funded at the full level, that he has conversation back to them as why that is not being funded, and potentially open the door for conversation for them to rebuttal that or talk back and forth with them.
Anyone else? Rob?
I guess it's a question comment. One of the questions I had was, I know Member Phelan had introduced a kind of a position pool that we started this year. And can you speak to like what the benefit that has been, or have we seen a benefit to having those positions in a pool?
Yes, from my perspective, from the finance department and on the budget, I would say it's been very good. I'm just trying to pull the report up. It has helped accumulate some funds in that could be available for future use that is kind of held in that external, just in the general county general fund budget. There's over $500,000 available that could be used that won't be spent, because even if those positions are hired now through the end of the year, it's only the prorated amount that gets put in. So that's $500,000 that the board can decide what to do with in mid-year rather than waiting until the end of the fiscal year if they wish. I'll have a more solid update to be provided at the July committee on those figures. There's just some things that we want to kind of fine tune in the calculations just to make sure we have everything accounted for. But yeah, I believe it's beneficial. I'm not sure how departments affected feel about it, but I've not heard any negative feedback from anyone.
Thank you. And then I guess to that point, I still would like to encourage the organization to follow the example that you've already been recognized for in reassessing positions that we lose to attrition as to whether or not, if somebody moves up into that position, obviously most people that we lose are probably in a higher level position if it's through retirement. But after that somebody's promoted, the other position is reevaluated as to whether or not there is a benefit or still a need to that position.
Thank you for that, Rob. Anybody else? Comments? No? Okay. Moving on, then we are at public comment. Miscellaneous. I would just like to, Heather, is this going to be your last meeting, or will you be here for one more?
I'll be here for the board meeting, but the committee meeting is after I depart.
Yeah, so most of you probably, or all of you, have heard that Heather is moving on. So we're sad to see you go, and I appreciate all the work that you've done with me over the last few years. So it is much appreciated.
Thank you. It's been a pleasure.
Yeah. Okay, we're adjourned.